Joe Vaclavik here from CME Group in Chicago. The soybean market was sharply lower here on Tuesday. We are sitting in most contracts within about 10 cents of some fresh 12-month lows, so the market not acting very well here to start off the week. You know, the first big concern here among traders is the supply base. We had record production out of the U.S. in 2016, and South America is in the process of harvesting a record crop there. So between your two major producers here globally, we're just looking at massive output, which has really burdened the market, and that's why we've seen so much downside in this market recently. We've seen a big sell-off that's really spanned the January, really through the month of March and into April timeframe. Now, moving forward here, U.S. acreage is projected to be record high this spring. It's projected that farmers in the U.S. will plant the most soybean acreage ever by a long shot, and that's something that I think continues to pressure the market as we move forward into the U.S. growing season here. Now, not very many acres of beans have been planted yet, but it is widely expected that we'll see that record acreage, and that's something that USDA will likely confirm on June 30th. They already told us about the intentions on March 31st. Beyond that, we're going to really just watch U.S. weather patterns here. That's going to be the most important thing to the soybean market and to the rest of this grain complex moving forward. What type of planting conditions, ultimately what type of growing conditions, and then what type of yield are we ultimately able to plug into our balance sheet. That's really the name of the game. And until proven otherwise, the trade is going to go with the idea that we're going to have a trend yield and a normal type demand scenario, and it's really just going to leave us with a burdensome supply base. So there's always the potential for a weather issue, which is not there yet. Joe Vaclavik from CME Group here in Chicago.